Hello everyone, welcome to Commerce Academy. Today we are going to start with a question on consignment. Okay, so this question is based on abnormal loss and normal loss combinedly they have asked in this question. Okay, let me explain the question first, later we'll solve the problem. Okay, please focus here. SS Oil Mills. SS Oil Mills is a consigner and SW Stores is a consignee. I hope you're clear and you are able to differentiate between the consigner and consignee now. Okay, sent 1000 kg costing rupees 40 per kg. Okay, now they paid rupees 300 as freight and 200 as handling charges. So this is consigner expenses, right? During transit 100 kgs were destroyed accidentally. So this is 100 kg were accidentally destroyed. So this is normal loss or abnormal loss? So this is abnormal loss. Okay, abnormal loss. One second. Yes. So this is abnormal loss. Please note. Okay. It's abnormal loss, for which insurance company paid rupees 2,500 to SS Oil Mills in full settlement of the claim. Okay, I hope you're clear with this. On March 30, SS Oil Mills received an account sales wherein it was stated that 700 of oil was sold at 49.5 per kg. Okay, so SS Oil Mills received an account sales where it was stated that SW Stores had sold 700 kgs of oil at rupees 49.5 per kg, and expenses of consignee were go down rent, selling expenses, freight, okay, and commission is to be given at 10%. It was also reported that 4 kg oil is lost due to leakage and handling. Okay, so this is which type of loss? Whether this is normal loss or abnormal loss? This is normal loss. It's normal loss. I hope you're getting a question that how to differentiate abnormal loss and normal loss. For this, you have to look at the concept video which I've already uploaded in YouTube. Okay, go to the playlist in consignment section of the playlist and you can get all the videos relating to it. Okay, so I hope you are able to identify the abnormal loss and the normal loss. Okay, so let's prepare consignment account. So the format in the books of SS Oil Mills, in the books of consigner, right? Our consigner is SS Oil Mills. Consignment account, debit, credit. Okay, first we have to write 2 goods sent on consignment, 40,000 because 1000 kg, 40 per kg, right? 1000 into 40,000. Now we have to write consigner expenses, right? So what are the consigner expenses? 300 as freight, 200 as handling charges, right? The same thing to bank. In bracket you have to write consigner expenses, freight 300, handling charges 200, 500 outside in amount column. Now consignee expenses we have to write, right? To SW Stores, in bracket we have to write consignee expenses. Okay, so what are the consignee expenses? It's here. Go down rent 500, selling expenses 1450, freight charges 286, 500, 1450, 286. Okay, total it and write in the amount column. Now we have to charge commission at 10%, right? So on what you have to charge? It's given that 10% is to be charged on normal sale, right? On whatever sales has been done by the consignee, on that we have to charge 10%. That is the ordinary commission, right? So we have to find the sale. What is the value of sale? So 700 kgs of oil was sold at 49.5 per kg. So 49.5 into 700. So that comes up to the value 34,650. Okay, on 34,650 we have to charge 10% commission. 10 by 100. Okay, you are going to get the value as 3465 as commission. 2 SW stores in bracket commission 3465. I hope you're clear with this, right? Now, the abnormal loss. Abnormal loss is here. During transit, 100 kgs were accidentally destroyed, for which insurance company paid 2500 to SS Oil Mills. Okay, now we have to value the abnormal loss. Valuation and calculation of abnormal loss. First, we have to write value of goods destroyed. So, what is the value? 100 kgs, rupees 40 per kg. I hope you are expert now in doing the valuation of abnormal loss as well as closing stock, right? I hope you have seen my earlier videos. Okay, if you have not seen, please go and check. Okay, so value of goods destroyed 100 into 40, 4000. Now we have to add consignor expenses. So consignor expenses are, what are the consignor expenses? You have to add all the consignor expenses. I hope you have seen my concept video as well as the valuation of abnormal loss video. Okay, in that I have explained clearly. Here also I am going to explain. Okay, during the valuation of abnormal loss or closing stock, you have to add all the consignor expenses. Please note, you have to add all the consignor expenses. Okay, freight, handling. So 300 and 200. So it comes up to 500, right? For 1000 kgs, it is 500 rupees. Okay, consignor expenses came up to 500 rupees for 1000 goods. 1000 kg is 500 rupees. For 100 kgs, how much rupees? You're calculating for 100 kgs of oil. Okay, so you have to cross multiply here. 100 into 500 divided by 1000. 2 0 cancel, 1 0 cancel. 10 into 50, 10 into 5, 50. I hope you are clear with this. Please keep the note, make the note of the format, because it should come in the same order, or else your answer will be wrong. Okay, for 1000 kgs 500 rupees, for 100 kgs how much? Okay, now add consignees non-recurring expenses. See, the goods were destroyed in transit, right? So what are the what do you mean by non-recurring expenses? I have explained in concept video as okay. So non-recurring expenses, so all those expenses we have to consider up to goods reach consignees go down. Okay, now the goods were destroyed in transit itself, right? In transit, so all the expenses up to the goods were destroyed in transit, right? All should be considered up to goods were destroyed in transit. So we have the consignor has not made any expenses, or has not made any expenses, right? So we should not consider anything, because there is no expenses up to the goods were destroyed in transit, right? So it is nil. If you add 4000 plus 50, 4050. In question, it is given that they have received insurance claim of 2500. So 4050 minus 2500 will come up to 1550. So this is the net abnormal loss. So the net abnormal loss value should be written in consignment account by P&L in bracket abnormal loss 1550. I hope you are clear with the abnormal loss. Okay. Now we have to write insurance claim. So what is insurance claim value? 2500 by insurance claim 2500. Now we have to do the valuation of consignment stock. Okay, you should write a working note there. Working note number 2, calculation of consignment stock. Now we have to write this formula also. Okay, you have to remember this formula. For normal loss, we have solved using the same formula, but there was no abnormal loss here, right? I hope you are revising this formula. So closing consignment stock is equal to cost of goods consigned plus non-recurring expenses minus gross abnormal loss divided by quantity of goods consigned minus normal loss units plus abnormal loss units. Here better to put bracket, okay, into consignment stock units left. So cost of goods consigned. So what was the cost of the goods consigned? 1000 into 40, 40,000, right? 40,000. Add non-recurring expenses. So here non-recurring expenses were incurred by both consignor as well as consignee. See, You have to consider both all the consignor expenses for non-recurring as non-recurring expenses. So 500 will be the consignor's non-recurring expenses. Now in consignee, can go down rent be non-recurring expenses? No. Can selling expenses be? No. Can freight be non-recurring expenses? Yes. Freight is the non-recurring expenses. So you have to consider freight. 286. See, 500 is the consignor non-recurring expenses, and the consignee's non-recurring expenses, the freight value 286. Okay, minus gross abnormal loss. So how did you find gross abnormal loss? Look at this working note. Working note number 1, calculation of abnormal loss. Value of goods destroyed 4000, add consignor expenses 50. So if you add these two values, you are going to get 4050. Okay, so 4050 is the gross abnormal loss. Okay, the value before deduction of insurance is the gross abnormal loss. So this value is to be taken and is to be put here in the formula. Gross abnormal loss divided by quantity of goods consigned. Quantity of goods consigned. So how much quantity was goods of goods were consigned? 1000, right? Minus normal loss units. How much units of the goods were destroyed? Sorry, how much units were lost in normal loss? 4 kgs is lost due to leakage and handling. 4 kgs, right? So 4 kgs plus abnormal units, lost units 100. So add 100 into units left. Okay, what are the units remaining? So how to calculate this? See, I have written here 1000 goods has been consigned, right? In that 100 units, 100 kgs were lost in abnormal loss. 4 kgs were lost by normal loss, and 700 goods were sold. So 1000 minus 100 minus 4 minus 700 will give you 196 kgs. So 196 kgs is the units left in godown. That is nothing but consignment stock unit left. Units left. So 196 kg. So if you do the calculation, you are going to get the answer as 8036. I hope you are clear with the consignment stock valuation. Please note the formula. Okay. In the valuation of abnormal loss, see the procedure. 1000 kgs, 500 rupees, 100 kgs, how much? Okay, it should be in the same format. See, in the by consignment stock 8036. Now add credit side and debit side and see which amount which side is greater. So credit side is greater here. So in debit side, 2 P&L profit on consignment. Okay, so the difference amount is 535 and total is 46,736. 46,736 is the total. I hope you are clear with this question. Okay, thank you so much for watching. Please support us. Please like, share and subscribe my channel, and please comment if you have any doubts, okay, relating to this question, and if you and please comment how was my teaching. Okay, thank you, bye bye.